All right, everyone, here we are with ticker symbol GSAT, Globalstar Inc. And before we jump into this chart, I want to say welcome to all the first-time viewers and investors. Welcome to the channel, Invest for Tomorrow. To all the subscribers, welcome back. And as we dive into this chart, I do want every single investor and viewer to be aware that I have a new ticker symbol to share with you guys that you definitely won't want to miss. I'm not one to hype up a stock or actually overinflate it or anything like that and make a big deal about it. But this one right now, I actually see big potential, or I actually like to say massive potential for it because of the sector that it's in. It's so fresh and new, and catching it at the right time is so important, right? So the earlier, the better. Now, it's already ran, so we want to watch it carefully. It's kind of in a consolidation, but we're going to look over it. We're going to compare it to the top dogs. You guys may be surprised on what sector it is or what ticker symbol it is. So I look forward to seeing your guys' thoughts on it. But this ticker symbol is definitely one to have on your radar and watch closely moving forward. And I also want to announce to every single investor and viewer that I will be launching a Patreon as early as tomorrow or sometime later this week. So stay tuned for that. And all these ticker symbols I talk about towards the end of the video, you guys will be able to see them firsthand as soon as I start analyzing them and watching them moving forward. And there's going to be so much other information and resources to learn from through the Patreon moving forward. So stay tuned for that as well. So here we are. GSAT, Globalstar Inc., right? It actually ran up, right, when things got real hyped up last week. And it ran all the way up. Actually, not last week, but last week, the 9th. I was going to say all the way back to the beginning of February because the run did slightly start way back here towards the end of January and then slightly the beginning of February. But last week is where it took off. So it took off all the way to this point and we reached a high here of about 306. It's dipped, and I've talked in the previous videos that we want to watch this carefully, that it doesn't break through this low here. 192, give or take, right? Before it was this point here at $2, it did get broken through and the new low was 192. And we needed to watch carefully if this would consolidate and hang out within a channel, right? Nothing too crazy, like just running all the way up and then running all the way down and stuff like that. So far this is looking healthy. So we've seen it previously, small consolidation periods. The longest was here, and we're starting to form a consolidation period here before probably the next catalyst to bring this up. So you definitely want to keep that in mind. This is a healthy sign so far, right? But this up and down with the volatility is normal in the market, but we want to keep in mind where it came from. It came from way down here at the beginning of January, all the way back to 30 cents and even lower, back to like almost 20 cents and some change. So this has been running upwards and it's holding itself up pretty well above $2. Yes, it touched 192, but above $2 range is really good. And like I stated, it's staying within that channel that we've been wanting to watch and see if it consolidates till the next great news or catalyst for this stock. So let's look at our new resistance and support in a much narrow form, and then we're going to talk about it a little bit broader. So the 50-day moving average here is 230. As long as we're above it, bullish, below it, bearish, right? We're in bullish territory right now in tug-of-war zone. This is a very close one. Our support here, the lowest point reached, was 220. If that gets broken through, your next point of reference is down here at $2. So between 220 and $2, you want to watch how this is reacting and how quickly is it hitting newer lows if 220 gets broken through. Now, if the 50-day moving average gets broken through and 220 has not been broken through, you have that small window to see if the bulls are trying to reappear or are the bears tearing this one down fairly fast. Now, our resistance within the last couple hours of the day is just 4 cents away from the current price of the stock at 232, and that's 236. Definitely needs to be broken through, but most importantly, that just gives us an indication of where the momentum is going and if the bulls can pull slightly away from the 50-day moving average to continue a momentum upwards. But the resistance they really want to break through is way up here at 261. If they manage to break through that, they could be on their way up to newer highs, new resistance levels, and pulling significantly away from the 50-day moving average, maintaining leverage and building a stronger momentum upwards. As always, If you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button to let me know you watched this video. Stay tuned towards the end of this video because I have a ticker symbol you won't want to miss, and you definitely want to add it to your watch list. So for everyone that has stayed to this point in the video, the ticker symbol I'm about to share with you guys is a big opportunity. There's a lot out there, but this one is in a sector that the opportunity to the price per share, to the market cap, is just so undervalued because it's so fresh and new into the market, and also it's a growing company. Once it makes it, just like the other big players in this sector, I mean, the opportunity will be big from this point moving outwards. So the potential here, according to this platform, their infrastructure and their business goals and everything that's projected about them, it's a big opportunity if everything obviously falls into place and so forth. So when I mean big, and you guys know I'm not hype, you guys know that I don't like to overinflate things or, make things seem bigger than they are. But I am here to emphasize that this stock is a big opportunity. So before we jump into the ticker symbol I'm going to share with you guys, I just want to quickly look here at Genius Brands. We talked about it yesterday, to add to your watch list. So this was at about 201 when market closed on Friday. So when I said this was a learning experience for anyone that didn't know or wasn't too familiar with it, it was showing signs based off of different indicators like the RSI, the MACD, and also the closer moving average, that there was a possibility that this could start to work its way up. Well, it certainly did. It went from 201 all the way to 220. Quickly dropped right back down. So the volatility, you can see it there. Now, you want to continue watching this one going into the week because there is opportunity probably for this one to continue to do this type of movement as long as indicators are showing that. But right now, the ticker symbol is kind of fighting, right, to stay above that $2 mark, and it's coming right back down, and it's coming back pretty fast. I didn't think that it was going to come back that fast. I thought it would kind of consolidate a little bit higher, then probably pull back and then run back up, something like that throughout the week. And who knows, maybe it's pulling back to this point. More investors look at it as an opportunity, load up on shares and bring this one back up. So you want to continue watching this one carefully, but this is a very speculative play, so I want every single investor to be aware of that. So what ticker symbol is it that I want to talk about? Well, it is OZON. This is the ticker symbol you want to add to your watch list. This is the big opportunity. So here we are. You can see how this IPO'd, right, at around $40. It ran up to 50, came back down, and then it ran back up to 56, came back down to 46. From that point forward, it spiked up to 68, and it's cooling off. So the cool thing about this one is that when you zoom in, yes, you can see the subtle downward movement in a very slow fashion because it's only gone down $4. But when you zoom out, you can kind of see that it's consolidating. It's hanging out within this channel. It hasn't broken through the $62 mark, and it hasn't broken through the highest point here after that drop of $66, almost 67. So you want to watch this carefully. If it breaks through 62, it could start to hit newer lows. And if it continues to stay in this channel, all it takes is another catalyst for this to run up. Look how small the market cap is. And what are they? Well, they're an internet retailer. They are comparable to Jumia. And if you want to compare it to the top dogs, Shopify, Amazon, eBay, and so forth. Now, even when we go to eBay, eBay's pretty small. These guys have so much more room. So who is Ozon? Well, they are the Amazon of Russia. Pretty much. Based off the articles and everything that I've seen, that's pretty much what they are. I look forward to seeing what you guys find about this one. If you want to comment down below, I would appreciate it. Or what you have found if you already knew about this one. But very important to do some research here on this and not miss out on knowing more about it. Because look at eBay. eBay's market cap is 42 billion and it's in the 60s range. So yes, it's almost in the same type of sector, but this is even bigger. Ozon is even bigger. Look at that, 11 billion. So if this was to go into the 40 billion mark, just like eBay, like we could see here, 42, and it's going for 62 a share. There's probably more that goes into the market share, right, of these two different sectors, and then also the market cap and the price per share that make these value differently. But once this hits like 40 billion, this is going to be upwards to, maybe 2x or 3x the current price. Think about that. So when we go to Jumia, let's see how Jumia is doing. Now Jumia is comparable to this one. They're fresh, they're new. Jumia has a smaller market cap and they're around the same price per share, right? So there's room here even for Jumia, right? This is awesome stuff here. Now, when you compare the two of them, some people will say that Jumia has a little bit less of an infrastructure or growth potential than Ozon. One is better than the other. That's more of a personal preference. But the top dog here that leads the whole pack is Amazon. Okay? Amazon leads the whole pack. Could these market caps of these companies reach these numbers? Possibly. It's going to take years, but it can possibly reach that. And if it even reaches half of that, just think about dividing this share price in half or even to 1/3 of this total amount and look at where these stocks are at. They're in the 60s. So much room here. So I definitely see big opportunity here. This is so fresh, and it started off at a nicer number than Jumia. That's another thing to consider. It was priced in per share at a much better valuation than Jumia to start. Jumia was way back below $40. So this stock has started off, and if anyone that is an investor or viewer that remembers, there might be some of you here watching my channel, when Amazon started, Amazon was around these prices. And it took years to get where it's at, but, I'm not saying these are possibly going to be just like Amazon and that they are like Amazon, but the potential is there. As always, guys, thank you guys so much for watching, and let's make some money.